So the overall shape of the portfolio remains broadly the same as it was 6 months ago, with a diversified global allocation favouring smaller and medium-sized companies, each with a clear and, in our view, leading focus on providing solutions to real-world climate and wider natural capital challenges through our 6 environmental solution themes. We continue to particularly favour our green building and industry theme, our clean energy theme, and our circular economy theme, those 3 making up, in combination, 2/3 of the overall portfolio, with the remaining third split fairly evenly across sustainable agriculture and land, water, and our green mobility theme. Whereas the allocation to these 6 themes remains broadly the same, within these themes we have taken profits and in some cases exited entirely companies where we have felt management or market expectations have remained high in an environment of declining consumer confidence. A common feature has been looking for cases where there have been significant inventory build-up in recent months and quarters in response to global supply chain challenges and bottlenecks and, of course, inflation, but therefore running a risk in some cases of a sharp destocking event. In terms of net asset value, the Jupiter Green Investment Trust has returned 7.2% in the second half of this year to date, versus 5.5% for the MSCI World Small Cap Index. A key driver of this has been a strong resurgence of companies within the portfolio's water theme in particular, where underlying revenue streams can tend to be highly defensive. For example, serving municipal and commercial sectors on critical long-term contracts. The Trust has also benefited from notably positive stock-specific contributions from the green building and industry theme, where energy-efficient solutions are enjoying buoyant markets in the current high energy price environment. So the first example would be a company called First Solar, which is an American manufacturer of solar panels and a provider of utility-scale power plants in North America too. The company is, we think, uniquely well placed to take advantage of several key growth drivers, standing alone in the industry with its differentiated production process and technology, but also a unique position of having a manufacturing footprint already in the US. This is now particularly valuable in the current environment under the US Inflation Reduction Act, which incentivizes both the production of clean power, but also the production of those technologies on US soil, which the company is particularly well positioned to benefit from. The second company is a company called Evoqua, which is a global leader actually in helping municipalities and industrial customers protect and improve one of the world's most fundamental natural resources of water. The company has a range of solutions, including those which tackle what's known now as forever chemicals. These are a growing issue that are now firmly in the sights of regulation in both the US in particular and also within Europe. These are chemicals which are found in everyday items such as fast food wrappers and containers, in stain-resistant fabrics and also in firefighting foams. And because the chemical bonds within these chemicals take decades to break down, they are therefore naturally accumulating every day in rivers, in lakes, in streams, and ultimately in aquifers too, therefore presenting both an environmental and a health-related risk. Evoqua is one of the few companies available to us globally which has a solution that can address the contamination in the natural environment as it stands today. So while naturally for environmental solutions investors such as ourselves, we're looking for companies that can provide solutions that can substitute forever chemicals, we also have that growing burden to address too, and companies like Evoqua can do exactly that. We've had a long-held conviction that environmental challenges are central to global development in all forms. Addressing both the causes and the effects of these challenges is inevitable, with environmental solutions currently crossing a watershed moment, in our view, where they are no longer deemed peripheral, but instead integral and central to future pathways and ultimately markets. The great energy shock of the last 12 or 18 months and the critical role that clean energy and energy efficiency solutions have played in responding to the long-term challenges around energy security, affordability, and ultimately sustainability serve to highlight the crucial importance of environmental solutions in solving those unavoidable and era-defining issues. In a similar vein, food security is a key topic that gained prominence earlier this year following Russia's shocking invasion of the Ukraine. We expect that food systems will come under greater pressure and greater scrutiny as these connected issues of affordability, security, and sustainability continue to challenge the sector. Food production accounts for about a quarter of global greenhouse gas emissions, about a third of global energy consumption, over 70% of water usage, and 40% of land use. And this makes agriculture both a key contributor to climate change, water stress, and biodiversity loss, as well as being a sector which will be severely disrupted by these challenges into the future. The knock-on impacts for food security are indeed already being felt. And the agricultural industry, in our view, is ripe for the solutions to solve these sustainability-linked problems with both novel and existing technologies and services. With our exposures in this space and in the portfolio, for example, including novel ingredients for alternative and plant-based proteins, in particular where this involves high degrees of intellectual property and ultimately high shareholder returns.